Hey everyone, welcome to week number 2 on our vlog here, growing a small account trading put credit spreads. Just want to quickly go over the results from last week here with you guys real quick. And then we're going to talk a little bit about stop losses, and we'll make this video nice and short and sweet, and then we will recap next week for the next video. So last week we made let's see, so we made one trade on the 11th, and that one was a winner. We trade QQQ. We saw that the 90-day average was 448.10, so we sold the 448 strike. We bought the 443, which gave us a spread of 500. We had a negative 0.24 delta, a negative 20 delta. We did 45 days out, which the expiration is July 26th, 2024. We collected $1.08 in premium, which gave us a $90 credit. We had our stop loss at 138, which we're going to talk a lot about stop losses today, because I just want to make sure that you guys understand how I do things and what the real risk is here, okay? So we took a profit of $45. So far with week 1 and 2, we are up $200 so far, okay? So out of the, let's see, we have 5 trades so far. This is including this week, which these ones haven't closed. So we have 3 out of the 5 so far, okay? And these 2 are still working, which we're going to show you. So basically how I do it is I always have 2 going at a time, okay? So once one closes, you know, for that day, I will open one up the next day, okay? And then if both close, I'll open up 2 more for that day, okay? Which we went over how to research, which I put in all the values here for today. So if we look at SPY, we updated the prices. This was pre-open today, you know, so we got all of our 90-day averages. I didn't update the sell strikes because I'm not researching these today, because I already have 2 open, so we're not going to be buying, we're not going to be executing any trades today. So let me go back and talk a little bit about where we're at, the 2 that we have open, okay? So right now we have our SPY, all right, which the SPY, we sold the 526 and we bought the 521. So this is our insurance. This is the one that we sold, okay? So let's go ahead and look at the chart on SPY. So we can see our SPY. This is where our 90-day average was this morning, which went up, so that's a good thing. This is our 526 that we sold, and here's our 521 for insurance, okay? I have 2 alerts set up, all right? So if the stock price comes down to the 533.95, which was this previous low here, I want to know about it, okay? So I can start taking a look at it. And then I also have another alert, which is kind of in between these 2, at 523. So if it came all the way down to here, that we want to start making some decisions, okay? But right here, we're going to start watching it a little bit closer. Here, we're definitely going to start making some choices what we want to do, all right? So let's go ahead and look at our other one, which we have SOXL, okay? So SOXL, we sold the $50 and we bought the $45 for our insurance, all right? So let's go ahead and look at that chart. So we can see SOXL's kind of been falling, which is still fine. We can see that it's coming down a little bit, which no big deal. This was our 90-day average this morning, again pre-market, which was $50.58, which came up from Friday, so it's always good. So here is our sell. So we sold the 50 and we bought the 45 for insurance, all right? And then we have our alerts. So again, it's this previous low, you know, where it bounced here. I want to know if it comes down to this mark, you know, send me an alert. And then also is kind of splitting these. When it hits 48, I want to be alerted by this as well. Okay, so let's talk a little bit about stop losses, just so you guys clearly understand. as I mentioned last week, you know, one cancels the other orders. I did those when I was practicing this, I guess, before I actually wanted to go live on it. And what I found, as you can see, is a lot of these trades would stop out. Okay, so let's look at SOXL, because this SOXL has been going up and down a lot. My stop loss for XOXL, which SOXL is this guy, number 5. Okay, so my stop loss is at $1.15. Okay, let me get this out of the way. Right now it's at $1.04. This has been as high as $1.43. Okay, so if I would have set one cancels the other, this would have stopped out and I would have taken a loss on this trade. Okay, and the way that I'm trading it, as you can see, we have, when I set this trade, it has 43 days expiration. So we need to give it time to work. You know, with the Greeks, we have theta time decay and we have our deltas. We need to give it time to do its job. It's going to fluctuate a lot, especially in the beginning. Usually day 21 is when we start having a lot of, you know, time decay. And this is my buddy Alex. He decided he wanted to hang out with us today on our video, so don't mind him. He's going to work with this here. So what I want to emphasize here is we have a lot of time to expiration. Okay, this is why on my sheet here I mark the 21 day to expiration, because this is the key point that we want to be looking at. So if this trade is still active, if it doesn't close out, which I'm pretty sure it's going to close out before July 5th, but let's just say it doesn't. Let's say we're at July 5th and this is still open. Okay, I'll start setting my one cancels the other stop loss now, depending on where this is at. Okay, so this mark here is going to go all over the place. But the main thing you want to focus on is the stock price. Okay, so as long as we're way up here, you know, and we're not approaching our actual stock price, I'm not so worried about the option price, especially with this many days we have until expiration. Hopefully you're following along with that. You can do this any way you want to do it, but the point I'm making here is if I would have set my stop loss, my one cancels the other on this trade, I would already have been a loss. Okay, I would have stopped out at $1.15. All right, so I would have taken my loss. The other thing I want to point out here is, as you see on my chart, I have a risk. I'm showing what my risk where I want to take here. But the true risk of a trade is going to be your spread minus the premium you took. All right, so let's take a look at this. So for SOXL, I took in a credit of $75. Okay, my spread is 500. So if you take 500 minus 75, you're going to get $425. So your actual max risk here is $425. Okay, so you need to be aware of this. You can set up your spreadsheet however you want it. Okay, so this is what you really want to be careful of. If you're not watching this, you're not setting your alerts. But again, we have a lot of days to expiration, and if we're looking at the way that, I mean, this is down to 69 cents. It was up to $1.43 this morning. Okay, so but if we look at our actual chart, yeah, this is trending down right now. But if we look at our average, we're still above our, we're plenty above our average here. Our two simple day moving averages are both going up. So am I worried about this going down here? No, I'm not. Again, we have plenty time to work. 21 days expiration is the key day. Okay, so if this trade is still live at 21 days expiration, we'll have a different conversation. But the way we're doing things, you know, right now, this is where I'm setting my alerts. And real simple to set an alert when you come on to your charts. If you just right click anywhere on here and you do create an alert, you can go ahead and create your alert. And again, I do it for the stock price. All right, so I would know if it's, you know, at or below this mark. And then I would just, I would just create it. And make sure that your notifications are set up, you know, to send it a text message to your phone, a push notification, so you can watch this and be aware of it. All right. If you're anything like me, you know, you have other businesses, so you're not sitting in front of the charts all day long. You need to have alerts to notify you to understand where you're going. All right. So that's going to be the video for today. Again, I just wanted to quickly recap our last week, which last week we closed 2. So we closed 1, but from the previous week on 6/4, all these closed. We took $89 profit on this one. We took a $66 profit on this one, and we took a $45 profit on this one. Okay. And again, for right now, we're just doing 1 contracts each. And we're doing 2 different trades. All right. So that's kind of where we're at. So again, if you guys have any questions on this, let me know in the comments below. But otherwise, stay tuned for next week. We'll do another update on to see how these 2 did, along with the new trades that we do for next week. And then in between, I'll make some videos to go along with next week, so I can show you executing the trade, setting up our order to take profit, you know, so setting up this order to take profit as well. People are texting like crazy. But next week we'll do the recap. I'll show you how to execute a trade as well as how to set up the order to take profit. All right. So again, I appreciate you guys. Make sure you subscribe and like the channel. Stay tuned. This is video number 2 of our vlog series of growing a small account, trading put, credit, spread options. But again, appreciate you. Hopefully you have an awesome week, and we will catch you next week. Thanks again for tuning in, guys. I appreciate you. Bye-bye.